The pension schemes were stopped in India from 1st January 2004. And so from that date, we can say that the responsibility of taking care of their retirement plans, the retirement savings and everything is cast upon the people. So they have to do it on their own. Now, when it comes up to you, you will have to decide whether I want to invest in mutual funds, equity, fixed deposits, or any other such scheme. So there are so many schemes and so many things where you can invest your money in, and then you feel confused, where should I put the money in? One of such schemes is the National Pension Scheme, which has been launched by the government for taking care of your pension needs on your retirement and accumulation of the surplus that would be needed for that purpose. In today's video of Commerce GYAN, we are going to dive deep in and understand whether the National Pension Scheme is really an advantageous scheme or not. So stay tuned till the end of this video to understand the varied aspects of the scheme, like returns, the tax saving, and everything about the National Pension Scheme, and whether it will be fruitful or not to invest in it. Also, before we proceed, if at all you have not joined this journey of Commerce GYAN, where we are going to share different aspects of commerce, investment, law, and such other topics. If you haven't joined and subscribed to this channel, do subscribe and also click the notification icon so that you will get intimated whenever a new video comes up. So let's proceed to the discussion on the National Pension Scheme. So in this video of National Pension Scheme, we are going to touch upon these two important aspects. First of all, whether it helps actually in a tax saving. And secondly, we are going to talk about the retirement planning. So does it really help as a long-term retirement benefit? All right. Now, what do people have to say about this National Pension Scheme? Let's look into that. So first of all, we have seen that many people are talking about the National Pension Scheme. What 90% people think is that it is safe and trusted, right? And but only 17% of these have actually talked about investing in this scheme. So even though people are trusting and finding it safe, it's not being encouraged. It's only very few people who are going for the National Pension Scheme. So why does it have such a low appeal? First important thing what we can see is the low appeal is caused because of less marketing. Also, there are margins or commissions what agents get on the sale of the National Pension Scheme are not up to the mark of other investment options. So they are not very much encouraged to sell this National Pension Scheme to people like you and me. Second is this scheme is inflexible in terms of its liquidity, right? Because if you tomorrow are in need of funds, you may not be able to withdraw this amount because it is a retirement fund. So it's inflexible when the withdrawal time limit expires, and or else on the second part, when you have crossed the retirement mark, the age of 60 plus, only then you are allowed to withdraw. And at that time also, you are not allowed to withdraw 100%. You're allowed to withdraw only 60% of it. 40% you have to buy an annuity. That means you will get it in the form of pension or till you are alive. And finally, the third important thing where we have such a low appeal is because it is having a complex and not so clear procedure. So since you have no agent or any person explaining these schemes, you will often find that you're confused on what should and where should I invest. There are tier 1 investment, there are tier 2 investments, and so on. Where should I go and invest? And will it be really beneficial? So nobody is there to explain to you whether the scheme is fruitful or not. And so also the procedure, how to invest, where to open the account, how to withdraw the money, where do you get the monthly or yearly or whatever statements that are required for NPS, nothing is known. So that way the process becomes more complicated and it's not so clear. If you talk of NPS as a tax saving opportunity, if you look at it as a tax saving opportunity, there are three sections which come under this: 80CCD1, 80CCD1B, and 80CCD2. So before we speak about these three sections, we are going to look at whether or not this NPS is applicable, the tax saving is applicable under new regime or old regime, where it is applicable. So is it applicable under old tax regime of or tax computation? And secondly, whether it is applicable under new regime of tax computation, right, under Income Tax Act. So yes, under old regime, it is allowed to the all three sections, you could say, and under new regime, it is allowed to a limited extent. Now, what is that? We are going to see in the next part. So here you will find how much of the deduction is allowed and under which regime it is allowed. So if you see section 80 CCD, it is allowed for the salaried and the self-employed both. So if you are running a business also, you can invest and get the tax benefit. If you're a salaried person also, you get the tax benefit. What is the maximum deduction allowed now? 10% for salaried and 20% of gross income for the self-employed. Gross income, right? It is of your income, only 20% is allowed. But at the same time, maximum allowable tax deductible expenditure is 1.5 lakhs per annum per year. And finally, it is allowed under old income tax regime only. So sections 80 CCD1 is allowed only for old income tax regime. If you see 80 CCD 1B, it is allowed for salaried as well as self-employed, and it is an additional deduction over and above this first section, which was 80 CCD 1, right? And what is the amount that is allowed? Amount allowed is 50,000 per annum. Old income tax regime only gets the benefit. So these first two sections are out of question for the new tax regime. So third one, now let's see, 80 CCD 2, this is specifically and only applicable for salaried employees. This is for government employees up to 14% of salary, and others it is only 10% of salary. This is the employer's contribution. It is not employee's contribution, it is the employer's contribution. Now, maximum allowed is 7.5 lakhs of employer's contribution. And finally, this is applicable for the new as well as old income tax regime. Okay, so the only benefit for the NPS is now limited to salaried employees who can avail this last section under both old and new regime. However, if you're a self-employed person, then if you choose the old tax regime, you will have the benefit of NPS. If you're choosing the new tax regime, you don't have any benefit of national pension scheme for tax saving. Okay. Okay, another important part of taxation would be on its maturity or withdrawal. Now, if you see the taxation or withdrawal of the annuity purchase, that means compulsory annuity of 40% is to be purchased out of whatever investment balance remains when you're withdrawing. This is taxable when received just like pension. Okay. Now what remains? 60%. Now 60% you have withdrawn, and this at the time of a withdrawal is tax free. So this is a very good advantage that the national pension scheme is having. When you withdraw that 60% after the time duration allowed, you will find that you're getting a tax free investment of 60% of the accumulated amount, which is quite good for tax saving on withdrawal, right? Mutual funds and other such schemes, often you have to pay a lot of tax when you withdraw, but NPS, you won't have to do that when you get the withdrawal done. On 60% at least, it becomes tax free. Now comes the important question that, okay, I am not going for this scheme, let's say for tax saving. Some people may invest in this scheme specifically for retirement benefits. It's not a harm, right? You can always plan your retirement on your own, just like the government used to do earlier. So in such a case, we need to now understand deeper and clearly whether or not the national pension scheme gives us the desired returns. So if you see the returns under NPS, they are divided into four asset classes where they invest. So in the national pension scheme, the investments that you are making to this particular fund will go into equity, or it will go into government bonds, or it will go into debt and any other alternative investment opportunities available. So all these combined together are going to give you the returns. Now, if you see the last few years of return since the national pension scheme has commenced, you will find that yes, there is a good amount that is getting accumulated in the national pension scheme due to the varied investments that they have chosen. So even sometimes you will see that 25% of returns are being shown in your national fund. surplus, or you can say whatever you are invested plus 25% has got added on to your national pension schemes. So it seems like a good return till date. At least the national pension scheme has been given good returns, has been adding on better to the corpus of your investment. So now, what are the key takeaways from our discussion? So you can see point number one is basically that you can yourself plan your investments. You can plan the national pension scheme as one of your investment portfolios, like part of your portfolio. So you may not put entire amount into the NPS, but yes, a specific amount per annum to NPS would be a good beneficial option, specifically for those people who are heavy spenders. So if you know that you don't have a control over your expenditures, and even if you buy an FD, you land up withdrawing from the FD for some expenditure, then this scheme is best for you because it will make you compulsorily save for your retirement. Correct? And secondly, the tax-free advantage of the 60% surplus that you're getting at the end, 60% of your investment balance is tax-free, which is a good thing. Third important thing is if you're opting for the old tax regime, then yes, NPS would be a good option because it is giving you the advantage of the two sections which we had seen earlier. So on that 2 lakh rupees, you will save the tax. Let's say if your tax slab is 30%, then 60,000 rupees you can save plus whatever the education cess on it will be, right? So it will be a good tax saving if you're opting for the old tax regime. And of course, when we're talking of basket investing, that means if you're putting some part in equity, some part in mutual funds, some part in FDs, then one of the part can definitely go to national pension scheme. Even though this scheme is less advertised and less marketed by the government or even by other people, then also you can always think of putting one part of your amount into the NPS, right? So hope this discussion helps you in choosing NPS carefully and understand whether or not it will be beneficial in your case. So for more such interesting content, do subscribe to the channel Commerce GYAN. Hope to see you in the next video. Thank you.